rising interest rates, recession fears, population shifts, and rising taxes in some states have the luxury housing market facing the perfect storm. But do all of these factors mean that this sector of the market is doomed? Well, stick with me for the next few minutes because that is exactly what we're going to talk about. And let me know, did you live in one of these really high tax states and did that make you move? Or if you still live there, are you thinking about moving? Let me know in the comments down below. Now, in recent years, there has been a noticeable trend in high tax states, seeing a population shift, meaning residents and businesses that are in those high tax states have made the decision to leave.
Bye-bye, tree.
And this has led to some significant impacts on the luxury housing market. Now, this exodus of residents and businesses has really been driven by their desire to retain their profit and reduce their tax burden. States with lower tax rates like Florida, Texas, Nevada, Arizona, and a few others have become more attractive based on their laws that are really more pro-business. The 10 states that rank the highest in income taxes, California, New York, and New Jersey, lost a cumulative net inflow in AGI of $391 billion. The fact that the 10 states with the lowest income tax gained in AGI the same amount as the loss in AGI for the 10 states with the highest income tax is not a coincidence. High tax states like California, New York, and Illinois have seen a substantial loss in residences and businesses, which is causing a significant impact in the luxury housing market. The California exodus to other states is even worse than we realized. The state's population dropped by more than 500,000 people between April 2020 and July of 2022, with the number of residents leaving surpassing those moving in by nearly 700,000 people. Now, the IRS even came out to say this when they looked at their overall migration data, which reveals how many residents have moved from one state to the other between 2019 and 2020. California's net loss totals were more than 332,000 residents, more than any other state, taking 29.1 billion with them to other states. New York and Illinois bled residents as well. New York's net loss was 262,000 residents, and Illinois' net loss was 105,109 residents. Florida, Texas, North Carolina, and South Carolina were the biggest winners. Those that live in California have really taken a beating when it comes to taxes this year. And if you're selling your luxury real estate, the government added a new tax called the mansion tax, which is going to cost you even more when you sell your home. Now, some luxury sellers got ahead of this and actually sold their property before this took effect. But for those that didn't, here's what it's going to cost you. This transfer tax is going to cost you 5% on the sale of your home over $5 million. And it's going to cost you 5.5% the sale of your home over $10 million. And this is on top of the already existing transfer tax. So if you sell your home for $10 million, you will owe an additional $550,000. Now, when you look at some of the prominent population shifts when it comes to the luxury real estate market, it kind of goes both ways. And what I mean by that is that some trends are showing that people are moving from rural areas into the city. Those people are in search of better economic situations, and some are looking for improved living conditions. However, what we saw mostly during the pandemic was people that lived in the city looking to move out. And this was because they had that work from home option. They sold their luxury home in the city and traded it for a luxury home farther out. And they would do this purely for a better and more relaxed lifestyle. Now, I will say that I am hearing a little bit more that some of those people that were put on a remote work from home indefinitely situation, they're starting to be called back into the office. And unfortunately, some of those offices are back in California, and those people don't live there anymore. And that's causing some of these people to start looking for other jobs or other opportunities that will allow them to continue to work remotely. They're just not willing to give up that lifestyle. Now, when these high tax states began seeing all of these residents leaving, they saw their demand drop, and they were then faced with an oversupply of luxury homes. Now, some sellers made the decision to just take their home off the market, but other sellers were forced to make the decision to lower their price to get their home sold. Now, because of the way the US housing market is reacting to all of this, different states are reacting differently. And what I mean by that is that there are some states that still have a lack of supply in their luxury housing market, like Arizona. We just don't have enough homes to sell for the buyers that want to buy them. And this is happening even in our luxury market. Now, if you need help buying or selling luxury real estate, make sure you take a look at that pinned comment down below. I have got amazing contacts all across the US, and I will help you personally find the right agent that will help you take care of everything. But this is not the case everywhere. In fact, one of the states that got a ton of attention during the pandemic and saw their home prices absolutely skyrocket was Idaho. And currently, their luxury market has seen an 8.6% decrease in their year-over-year home price appreciation. Washington has seen about an 8% decline. Bellevue, Redmond, and Bothell were the biggest culprits in terms of dragging down luxury home values in Washington, with prices falling between 9.49% and 12.07% over the past year. And California saw a 7.5% decline. Luxury homes in San Francisco, for example, suffered the biggest drop in any city in America, falling a whopping 17.19% on average. Numerous other Bay Area cities suffered the same fate, with luxury prices in Berkeley, San Mateo, Oakland, Fremont, and Redwood City all falling between 12.68% and 14.99%. So how do interest rates really impact the luxury real estate market? Because unlike the mid and lower tiers of the market, you don't often see a luxury homeowner go get a loan unless the interest rates are really low. These buyers often have financial means to avoid the loan process altogether. Instead, they will either pay cash or they will leverage some of the other money that they have, and this makes them less dependent on the current interest rates. What has a more significant impact on the luxury housing market are corporate profits. The financial strength of corporations has a direct effect on how strong the luxury housing market is. As corporate profits rise, not only can wealthy buyers afford more, but they feel better spending their money. However, when corporate profits are declining or they're a bit volatile, they often sit on the sidelines and just take a pause and wait it out. And this has a direct adverse effect on the luxury housing market. There is also a direct correlation between the stock market and the housing market. Sometimes they follow the same trends, but not always. Overall, when the economy is doing well, the stock market is doing well, and so is the housing market. Now, when the market starts to move towards higher inflation and a potential recession, like we've seen over the last 2 years, this is when you will see wealthy people move their money out of stocks and into real estate to hedge their bets against the inflation, which is why we have seen continued strength in the luxury market. And this hedging behavior can sustain the overall demand. However, there will be a time that all changes, and some feel that time is now. The big thing to remember is that luxury properties are not immune to economic challenges, and the rising interest rates and the recession fears do play a role in how hot or not the luxury housing market is. The tech layoffs earlier this year showed how much things like this affect the demand for luxury properties, because many of these tech companies and their employees are concentrated in an area with the top 50 most expensive zip codes, which really influences the luxury housing sector. Now, most of those that were laid off have already found another job, so it's not catastrophic, but it does send shockwaves to the wealthy buyer and homeowner. Now, the luxury housing market has outpaced the overall market over the past few years, even though it has really followed about the same pattern. The decline in property values since its peak in July of 2022 is only slightly higher for luxury zip codes, which is showing us that there has been a drop in demand for the overall market, not just luxury properties. Daryl Fairweather, Redfin's chief economist, said this: "The luxury market is definitely hurting in terms of transactions. Even when you compare it to the rest of the market, it's looking like luxury has really cooled off." Now, what I can tell you here in the Phoenix Scottsdale market is that this is the first time since the pandemic that we are seeing some of our normal seasonal trends. And over the past 4 weeks, our average price per square foot sold has actually dropped. However, this happens almost every year, and it is caused by having almost no luxury homes close during this third quarter. Luxury closings peak in May and June, and then after that, those that can afford a luxury home are usually finding a way to get out of Dodge, or they have another home that they go to for the summer. They're still getting out of Dodge. So the demand for luxury homes in the summertime does drop, but it's more of an artificial drop. It's not because people don't want to buy, it's because people aren't focused on buying. And what's abnormal about our market specifically here is that summer is not our normal buying season, which it is for most other markets. Overall, the changes in interest rates, recession fears, corporate profits, and economic conditions will continue to have an effect on the luxury housing market, and they will influence them in very complex ways. So it's important to keep your eye on all of these things when it comes to watching the luxury housing market. And real estate is definitely having a harder time in some states, but it is not across the board. So you have to make sure you are educated for where you want to live. Now, if you'd like to learn more about why the luxury housing market is stuck, make sure you take a look at this video. As always, I thank you for watching, and I'll see you next time.